Good morning and welcome to another edition of Roadhouse Live. We are live. Today is November 27th. I repeat, November 27th, the first day of trading in the last week of November, which will also be the first week of December. All these things are lining up to where there is actual momentum as far as one day turning to the next.
The math on that was just incredible.
Right? I even carried the one. I carried it.
Carried the one.
Carried it.
Yep.
So last night we get a little dip, we get a little rip, not able to get back up and over. Data was fairly light this morning. We do get some additional data. We get new home sales coming out at 10 a.m. The European Bank President is speaking here in the next couple of minutes. And we get a Federal Reserve Bank Dallas Manufacturing Survey, which will be coming out at 10:30 Eastern this morning. Everything for the most part, there really wasn't anything to create red candle by necessity, if you will. The one thing I have not seen, and maybe you guys have, but I have not really seen any type of data regarding new homes, but sales over the holiday weekend. Have you guys seen anything?
I haven't seen anything. I can't really recall when they start releasing that information, but maybe it's after the Cyber Monday.
Like years past, it's like they were just driving that data down our throats. Like, come like Thursday midnight, there was like Visa was like, oh, credit card transactions are X, Y, and Z, and all that kind of stuff. Like as far as like real time, almost nearly real time data tracking, going back a couple of years ago, seems like
maybe the data's not great,
right? That's the other piece of it. And then you kind of take that a little bit, and we did have a barrage of phantom prints this morning on both SPY and Q, marking for the most part below where we are now, but it becomes questionable whether or not we actually tap those on that overnight dip if we're doing that math. I think we were down like 70 at one point on the NASDAQ. So it was a pretty decent little spill and then buy back up. And if you're taking that trend line from the overnight to where we are, we just now, this little green candle coming in is basically that trend line from last night's low, motoring up to where we are. So if you want to take that, draw it down on a 15-minute or a 30-minute, whatever floats your boat, that trend line is holding from the bottom up. Let's talk about flow a little bit. Flow has been extremely bullish. Okay, but last week we started getting some lines, started getting some little things that are just like, well, that's not so bullish. That's not so spectacular. That's not, that's not what we need to see. And then I take that and I combine that bender with, I'm pretty sure Stonk heard it and a lot of other people heard it last week. It was just like, okay, so I'm going to sit here and look at nothing but call flow coming through and look at red candles. That's not a good sign. That's not a good feel for what the market is trying to accomplish when you have call flow blitzing and we can't catch a green candle to save our lives, which it was like that. Now, granted, maybe low volume, holiday trading, that kind of stuff, but we're in that mix to where we can expect that low volume holiday trading for, the next 4 weeks, maybe.
Indeed.
Yeah. So it's like we have to be aware of what we're seeing. What I'm not seeing that has me the most curious, I'm not seeing any significant downside targets on tickers like Apple. I'm not. I can say that I'm seeing downside targets on NVIDIA. I can say that. I can say that that Microsoft flow coming into this week for this particular week is not pretty. as far as what it was towards the end of the week as far as Microsoft. I can say that also. Amazon Flow, further dated, is not pretty. So is this, the holiday bonanza, yay, and then dip? I don't know. I don't know. Because Santa is still there. The buzz is still there for a Santa Claus rally. And the threat as far as hurting the market, which was interest rates for the longest time, at this point is not a threat in any capacity as far as rates moving higher. It just isn't.
Not moving higher, but it's still hurting things, right? Like, because they're still obviously very elevated. I mean, if we're using the context of the last, whatever, 10, 15 years, but
I'm glad you brought that up as far as the context of it. So when rates first started going up, what happened immediately? The immediate price in, when we went from basically all-time highs, give or take, flushing down to 3,600, right?
Yeah.
Somewhere in there. So the initial, concept of rates, moving higher, that was priced in immediately. Now, not only can we see the light at the end of the tunnel, we've passed the light at the end of the tunnel, right? As far as, the rates stopping. Now we know what the game is. Now it becomes, okay, when do rates pull back? And more importantly, why will rates pull back?
Mm-hmm.
That's where it becomes tricky. I don't think the market has an issue with the rates being in this range as long as delinquencies are not out of control. It's like when you start getting delinquencies, when you start getting all that kind of trash coming through that is like, oh, wow, there's a real problem, which I think everybody can kind of say, well, we're kind of teetering on a real problem here. I don't know necessarily when the Fed would look to cut rates, considering that they wait at least
too long.
Too long, but at least a couple of cycles. And I say cycles, a couple of meetings before they do what everybody in their right mind thinks they should do. They're the slowest moving bunch of molasses motherfuckers on the planet.
And I'll tell you something, and this just as it relates to rates and sort of the economy and the way things are moving. Very interesting. As you know, I talked about, I've been shopping for campers and trucks and things like that. And rates where they are, hanging where they are, it's like some of the big dealerships, I mean, all dealerships, but even like the biggest ones that tend to sell all of the current model year inventory, right? They're still sitting with 2022 models, brand new on the lot, right? I'm seeing stuff that has been listed for, not just at the dealerships, but when you're looking at private party, stuff that has been listed for 30, 40, 50 weeks. People are just sitting on it, right? Because there's nobody that wants to come in and finance that crap at 7% or 8%. And the same thing is like, you're seeing some of the prices kind of come down, especially like private party, like used trucks. Mm-hmm. Some of those prices are starting to come down a little bit, but there's this whole batch of people that bought stuff when supply chain shortages were an issue, supply shortages were an issue, and prices were elevated. People were paying over MSRP for vehicles, right? So now you've got this whole group of people that would normally be the ones that would potentially upgrade, after 2, 3, 4 years. And they are pricing their stuff like they're upside down, right? Because they bought at the height, they paid MSRP or over, and now there's all this stuff sitting on the market, and people can't. But there's a few people I talked to, and it's like, okay, you're expecting me to believe that your truck that is 3 years old or 4 years old has 75,000 miles on it. Carfax says it was in an accident. And you think it's only depreciated $15,000, and you're within $10,000 of a brand new truck. Like, who's going to buy that? Nobody's going to buy that.
Yeah,
And
especially
it's
with interest rates on a new truck being less than what they are on a used truck. That's just
right.
like
And
almost
it,
2x.
right. I think it's going to be seeing all that standing inventory in, again, 2022 models, 2023 stuff. There's a lot of that stuff that's still hanging out there that hasn't been sold. And I'm just kind of, it had like the more of it that I saw, I'm like, okay, either these dealerships have to come down in price, the secondary market sellers have to come down in price. Like something's going to happen because there's still just so much that isn't moving, right? And when I talk to the dealerships that like on the RVs, all of them say the same thing. It's like, yeah, it's slow. Like I used to sell, the number of RVs I'm going to sell this year, I used to sell in a month. And it's like, I just wonder how much of that, kind of carries over into other. It'll be very interesting as
Well, let's talk about what we're seeing that in. We're seeing that in things like washers and dryers and refrigerators, much less
yeah,
getting into things like boats and RVs and, secondary, thirdary vehicles, ATV, like that, like the fun stuff, the extra stuff, the stuff that you spend
yeah,
your extra money on. It's just not there. And even the stuff that it's like the washers and dryers aren't moving, refrigerators aren't moving. Those items aren't moving, and all data is saying that higher ticket items are not moving. And I think that goes back to the overall crunch. Now, in saying that, I don't know that I saw any deals worth an absolute lick on Black Friday for
I
myself.
found a couple, but again, it was stuff that we were like, my son wants a laptop for Christmas, right? And he's been waiting for a long time. I found a good deal on a couple different laptops that were priced very well. For the RV, we need a combo washer dryer thing or stackable. There were some good deals out there on those. There was some. I found some decent stuff, but
Decent deals on higher ticket items, right?
yeah, I wasn't looking at the lower.
Yeah,
I was just looking for what I need right now. So
what you need right now, and so they're all.
yeah.
But socks are still expensive, man. Socks are expensive. I could not find a deal on socks.
Do you shop socks on Black Friday?
Are you kidding me? It's
I
like
did
where I
not know that
live,
was a thing.
one of the most important things that I can have
Socks.
are
Got it.
socks,
Got it.
baby. It's all about them socks. So as far as data that we have coming out this week, we do get some of that important data. Let's run through it real quick, and then we'll flip it over to Bender to walk through the charts. One of the charts that I think is really worth paying attention to now is the dollar. Once again, it is in this little falling wedge on the 1 hour. It looks pretty dopey as far as potentially being able to move higher and through here, because this has been a very methodical falling wedge, very controlled, very whatever. Any type of a bounce, I think, is going to prove to be a little bit belligerent to the overall markets. But let's get into what data we have for the week, so we can kind of get an idea of what we should be looking for here and there. So we get new home sales here in a couple of minutes. Building permits came in above. Dollar had a quick pop higher and then moved lower. We do get a couple of bill auctions today at 11:30. That should be kind of circled in because we've had some pretty big candles in and around anything bill or bond or anything of the nature as far as those are concerned. Getting into the rest of the week. Come on now. Tomorrow we get Redbook. We get the housing price index. We get consumer confidence. And we're going to get a couple of Fed speakers at the same time. I think Wednesday is the larger day for data when I was going through it. Yeah, we get GDP on Wednesday, which could be interesting. We get crude oil inventories, which will be interesting with OPEC looking to make a decision here pretty soon after delaying the last meeting. That should be awfully curious what comes out of that. And then getting back into Europe has core CPI on Thursday, I believe. And we get PCE and core PCE, which is going to be a pretty big number on Thursday, which kind of Thursday circle big as far as being potentially market moving in a real way at that point. So, with that being said, Bender, you want to do the walk here?
Yeah, let's do it. And I'll try to make it a little quicker since we spent some extra time this morning just talking. But let's start with the daily here. This 4566 level we were watching, we can see we kind of pierced through it and currently acting as resistance. Once above 4566, then you've got 4596, and then we're talking about that August 4th high and the August 2nd gap. And then you can see this volume imbalance in here that eventually we will go fill that in. But it's all about the path we take to get there, right? To me, that's the obvious area, but how do we get there? That's always the question. So anyway, quick look on the daily. Let's go into 60-minute. Got some levels marked out here. So you can see this these relative equal highs right here, 45.74. And we broke this 45.59.25. Looking at the 60-minute, we have the potential here for, to me, what looks like a possible short-term kind of shift in market structure, right? We were moving up, making higher highs, and now pull back, trade up into this 60-minute fair value gap, and kind of pulling back here, right? So the possibility exists that, we may want to come down and take 45.52. We may want to come down and take 45.75. There's a lot of stuff kind of hanging out down here, especially 4,500 would be a big one, right? Because it come down and fill some of this stuff in. Now, this above, I would say at this point, above 45.70.25, or 45.70, get above that, take this 45.74 and hold up in here, say above 45.70, and it negates the idea of, for me, of that change in market structure, right? If it has filled this fair value gap, once that gets filled, if it gets a little pullback and then pushes back through here, okay, well, maybe it doesn't want to go take out some of these levels below. Going to a 15-minute. So I had this 59.25, 45.59.25. There was relative equal lows right there. We have now taken it. We're trading into this 15-minute fair value gap, so we'll see what they do with it. Kind of the first level that I would look for a reaction would be 45.54 half. That was this sort of swing low here before this bounce up. See if we get any kind of reaction. If not, look at 52. Not a whole lot of room in here to mess with. Below 52, I would be looking for 45.75. You can probably capture a couple points in there. I think that's about it. We'll take one quick look at the regular trading hours, and you can see, again, 15-minute, you can see this gap that exists down there. So maybe it wants to go kind of trade down into, which it did, this 45.52, you can see almost to the bottom of that gap, but that was extended session hours, right? So if it wants to come back down in here again, I'd be looking for possible reactions at 52, 45.75, And then that takes us down into a fair value gap here in the 30s, and then 45.20. So if the momentum, if momentum appears to be hunting to the downside, if we can't get above, say, 45.65.25 and hold, these are the levels that I'd be looking to target below. We talked about possible reactions below. Same thing exists for 45.65.25. We take that and then pull back below and leave a fair value gap behind that it trades up into. You can look to take that short to target some of these levels. But if it gets over that and you get that nice big candle through and it trades down into a fair value gap, you can look to take that long, targeting 45.74. I think that's about it.
All right. So we're pushing back down into what, the lows from overnight now, like whispering, or no?
Well, that would be like here, 45.52.
45.52. Okay.
Let me get right on that. 45.
We're at 45.57.
Yeah, 45.52 would be that low from midnight ish. Yeah.
All right. Stocks, what you got, buddy?
All right. Yeah. Let's get into some stuff. Let's see. I got to wake up, man. Right. We'll do the news real quick. Let's see if there's anything over here. Shopify, they did say they did a new record, 4.1 billion in sales.
That's good.
China. Let's see. China industrial profits fell between January through October by 7.8%. Let's see what else we got. Citibank is already expecting Ulta to miss expectations and guide lower, expecting to underperform. Amazon delivery is now bigger than UPS and FedEx. That's kind of wild. Let's see what else we got. Foot Locker downgraded, Lucid downgraded, and let's see, Frey, that battery thing, that's up 1.2%. That's an interesting commons play potentially. CCL's up 1%, upgraded. Let's see if there's anything else interesting over here. I think. And then Deere. We saw Deere with a bad ER reaction last week, and they got a downgrade. That might be Gap price target upgrade. Domino's Pizza. I like the pizza upgraded. New price target of 430, and that's over at TD Cohen. Let's jump into some charts here. I've got the SPY weekly. If we were going to do a Larry Williams smash day setup, it would be a short. So we're going to get an alert here that will pop at the bottom of the weekly candle if we break that low there on the SPY. I haven't done it here, so we'll do it. Yeah, the Qs, same thing. You'd have your, if we break this low, that would be, we're getting an alert. That would be the entry. And then your stop would be that high. That would be over there on the Qs. Let's jump into the charts that have all the markup there. Let's see what we got. This is interesting. I kind of was looking at this on the NASDAQ. We had this little, really clean if you look at it here on the 4 hour. Excuse me. And they just came in and took these guys' stops and bounced it, which would maybe think maybe they want to run it higher. And then we've kind of got this like bull pennant type of thing going on over here. So I kind of like this a little bit, that we did go in and take those guys' stops, and now we're kind of working on this little flag type thing up here. And then I've got marked up just a high. If we zoom out to the daily, we've got some room to get up into this all-time high. Orange boxes are weekly gaps below, and then I've got this marked up as a potential bullish order or breaker block, because originally it was a green candle followed by an aggressive sell, and we sliced through it to the upside. So it'd be interesting to see if we get back down here, if that works as support. So we'll see what we get here on NASDAQ. But I kind of like this set up for more upside based on this kind of flag and the fact that we took these guys stops already. So we'll see what we get over there. Also liking the setup over here on the Russell. So we've got this guy, this ascending triangle with equal highs above. So we know there's going to be a lot of bears, break-even stops sitting right up there. It's kind of got, because it's like equal highs, it's kind of got this thing going on. Push up and then consolidation. So we'll see if we get that continuation out of this thing. And then we've got this kind of whatever is going on in this blue box here. This is a key area. You can see all the candle bodies kind of stalled out at the bottom. And then when we were in the torture box last week, everyone was stalling out here at the top. So we're right up against it. I'm leaning for more upside over here on the Russells. But if we, I'll definitely be head on a swivel if we give up this trend line as well as the bottom of the box down there, 17 at 96.8 over there on Rusty. Let's see what else we got going on. Crude was getting a little pop here pre-market. Now it's giving it back up. On the daily here, I was looking to see if we're going to maybe potentially be in the right shoulder of an inverse head and shoulders over here on crude. Kind of looks like it's ready to stop going down. And I think I've got my chart with all the markup here on crude as well. Let's see. Yeah. So we've got this key level below the 74.6. We've kind of bounced around on it, and we're still stuck in this big falling setup here. And then we've got this orange box is going to be a weekly gap above. So going to kind of see what we get. I'm starting to lean like a little bit more bullish on crude. See if we're going to stop going down now. The other one that I would take a look at is gold, which gold appears to potentially be cooling off a bit. Let's see, we're still kind of in this rising setup. I was looking for potentially this to be left shoulder head, right shoulder over here, but looks like that's invalidated. We've got stops sitting. This is this last high. Looks like they didn't take it yet. So, we are in an uptrend in this, even though it's a bear flag kind of rising thing. So we'll see, if we can kind of keep pushing. I'll be interested to see if we can go take this 2019.8 and we'll see what we get over there. But we're kind of in this rising setup over here on gold. Let's see. We still have, I'll probably be just kind of calling the rest of the levels in the room. We've got Apple back around this 190 round number psych level. I think that's going to be important. And then if we lose it and we're start to go down and be looking down here at this big dark pool, 188.01. Everything else will just kind of watch flow and see what we get.
All right, very nice. So, look, it's like we've had a nice run. We're sitting here consolidating. We're a little bit hungover. Volume is again fairly anemic, which should be expected. Flow is, I would say, still bullish, but there's some writing on the wall as far as the market looking to pull. I like your idea, Stonk, as far as getting up there and messing with those relative equal highs or whatever we have up there. That we've created pre-market, and then kind of jostling around whatever needs to happen based off of that. Kind of like that, the overall idea. Something to keep in mind if you're trading the NASDAQ specifically, if you're looking at SQQQ, that dark pool at 1589 that came in as an unusual that from last week was in play again this morning as far as acting as support. Now, is it something that we have to worry about and deal with? Is it going to be like this never-ending thing? I don't know, but I know we tend to trace and retrace these same levels over and over again. So 1589 on SQQQ, be aware, because it's like if that continues to act as support over and over again, if we dip down into it and bounce again, it may be a little bit rocky for the rest of the trading day. So that's what I got. And what's interesting about that song, that would probably push us back up into messing with those relative equal highs that you're looking at over here on SPY and Q, as far as shaking those and then seeing what happens from there. So that's kind of what I'm looking at, what I'm going to play around. Again, I don't need to do a whole lot this week, next week, or the following week in order to be happy going from this year into next year. So, just pick your spots. You don't have to be in on every last thing that exists. So, you guys have anything else that you want to offer, share, anything along those lines?
I think we covered it.
All right, everybody. We have 10 minutes until open. 10 minutes until open. We'll see you soon.